Back to Market on Close. I'm Marley Caden. Nvidia hit an all-time high today after news that President Trump eased AI chip restrictions, and Nvidia will now resume the sale of its H20 chips to its customers in China. Joining us now to discuss the AI giant is Nigam Arora, the founder of the Arora Report. Nigam, thank you for being with us today. Now, I would love to first get your thoughts just generally on this course reversal about the chip sales to China.
Well, Jensen Huang is supposedly very persuasive. We met with President Trump, and I think he was able to persuade him. And Jensen has been pretty steadfast that American companies need to dominate. And it appears he made a case to President Trump that either he can let NVIDIA export these H20 chips, which are less powerful than Blackwell, or Chinese are going to catch up with their, domestic production. And President Trump bought it, and NVIDIA is a winner. So here we are.
NVIDIA certainly is a winner today, hitting yet another all-time high, trading as high as 172.39 today. And we did just see them also hit that $4 trillion valuation last week, a huge milestone. You say you see a path to $8 trillion. What's behind that?
Well, the next big thing. See, when we were saying aggressively buy NVIDIA, it was a $300 million company. Our average price is $12.55 because at that time, people were saying, yeah, maybe AI, maybe not, maybe it's a fad. And, we were convicted AI is real. And now everybody knows what happened, right? So the next big thing is robotics. Two kinds of robots, right? One of the industrial robots that we already see, like in Amazon warehouse and so on. They're going to grow a lot. But we're talking about humanoid robots, right? The kind that Elon Musk shows serving drinks and things like that. So it's a future. We really cannot predict the future for sure, but we have to have some imagination, right? So there are some predictions. If you look through some models that humanoid robots could be as big as a $3 trillion market. That's a huge, huge market. I mean, it could be bigger than cars. And you and I will be having our own robots, right? So the question is, how do you benefit from it? Tesla is obviously one. But then who's going to provide the brains, the chips, the software, and all the infrastructure that is going to take to, not only robots at the edge, but also in the data centers to control all that? And there's nobody else like NVIDIA. NVIDIA is very well advanced. They're providing, end-to-end, both for the data center and on the edge on the robot, a lot of development tools, doing a lot of development. So if robots do become, grow like some are thinking, and I think it can happen, NVIDIA is going to be the prime beneficiary. And it's hard to imagine, the first $4 trillion company, what are you talking about, $8 trillion? We've never had even a $5 trillion company, right? But, I'm old enough to remember, when there was never a $1 trillion company, and I was writing an article, when Apple was, like a $50 billion company, I was writing, say, Apple is going to be a $1 trillion company. And people were saying, what are you talking about? How could that be? Well, now we're talking about Apple at $3 trillion, right? We're buying NVIDIA at $300 million, and now it's $4 trillion. So the key is robotics. Now, the thing about futures is we don't know. It might not happen. So how do we handle it as investors? So the approach we take at the Aurora Report is we have a core position, which is, again, long from 1255, and then we have been changing buy zones so newer people can buy it higher and higher. So we're going to hold on to that for a long time. And then we have something called what we call a trade around positions. So where we have a shorter term target, stops, risk control. For example, in April, when NVIDIA dipped around $90, we were buying again as a trade around position. So we treat that as a separate position. So I think that's the way to do it, because if NVIDIA does become a $8 trillion company, we'll participate in it. And if it doesn't, so the thing is, the robotics doesn't take off, NVIDIA is probably going to go from $4 trillion to $2 trillion. So we got a risk. So we're controlling the risks on both sides. And you may ask why it may go to $2 trillion. Well, there's a lot of spending going on AI right now. But hyperscalers are going to be done with this spending at some point, and the emphasis is going to shift from training to inference. And inference, we got a strong competitor in AMD. Whereas in training, we really don't have much competitor for NVIDIA. So if robotics don't take off, NVIDIA is going to be cut in half. If robotics take off, NVIDIA is going to double. So that's the bottom line.
Nigam, I love this. You haven't seen my questions. No one has them but me, but you just answered all four of them in exact order about the robotics market. So very impressive. I'll ask you one I didn't write down, if somehow you got access to my questions. With this new transition, this course reversal about chip sales to China, obviously NVIDIA in the central framework here as a primary provider, and with that secondary chip they were providing, can NVIDIA actually meet the demand that they're about to see, or does this potentially open the door for competitors as well?
So we got a design, the chip design itself. We got a software. NVIDIA has the designs, they have the software, no issue. Now, can they produce? So they're dependent on Taiwan Semiconductor, TSM. And so it will come down to, does TSM somewhere get capacity constrained? But the thing is, other than TSM, there's nobody else who can produce these chips. So there's no competitor in that respect. So people are going to have to wait on NVIDIA, and AMD's chips are being produced by TSM too. So TSM could become a bottleneck. And as a result, TSM is probably a great investment here too, especially if it pulls back. Great question, by the way. I love it.
Oh, thank you. Yeah, TSM is the linchpin in all of this, of course. Now, I do want to shift gears here a little bit and talk to you about some potential buyout candidates that you have flagged. I know that traditionally, even on our network, you flagged some potential buyout candidates that then did end up being buyouts. What particular companies are you keeping your eyes on right now?
So we have several of them, but I'm going to mention only two. One is AES. It's a power company. They own some regulated utilities. They own a lot of non-regulated power. They're big in solar power and so on. But what has happened with this, our big, beautiful bill, all the incentives have gone down for solar. So the stock has dropped, right? And I think you can see on the chart. And so it has become a great buyout target. There are only so many regulatory utilities. There's only so much capacity. We need more power for AI. And all power stocks have run out, other than this one. So that's why it becomes a buyout target. So that's one.
So they're one of the buyout other ones. Who else are you watching? Is it in the same sector or a different sector?
No, it's different. It's different. It's in the software sector called Verint, VRNT. Mm-hmm. They're in the customer experience, when you call in and try to get answers to the questions. So on one hand, you would think their business would be decimated by AI, but they also have their own AI bots. So their business is in transition. So I think if private equity can buy them and merge them with other things, and, we probably could get a 20-30% gain from here.
All right, so those are two you're keeping an eye on right now. Now, with AES Corporation, you did mention the big, beautiful bill. So I would like to get your thoughts just on sort of macro risks as it comes to tariffs and new legislation and moves by the current administration and headlines driving the markets.
You and I must be buddies. We know each other's questions and answers. Anyways, so the market is pretty much saying it's going to be like 10% tariffs. We can handle it, no big deal, right? So I started out with a lot of principles a long time ago, which, affectionately got to be known as Arora's laws. So we say, second Aurora law, nobody knows what's going to happen next. And after that, all we can do is look at probabilities. So when I look at probabilities and look at what President Trump is trying to do and day-to-day changes his mind, so I think there's a 30-35% probability we may end up with tariffs, not 10%, but ultimately when it's all said and done, 15 to 20%. And if that's the case, the market is not prepared for that. And if that's what happens, then we're going to see a pullback in the market. And nobody's prepared for that right now because everybody's so bullish, right? So when everybody's bullish, I think I'm bullish too, but it makes sense to know what can happen and what's the probability of it to guard against that. And we are guarding against that. And I think all investors should guard against that. And, I see a lot of investors these days, they're fully margined, all in. And my advice would be caution. Don't be fully margined. Don't be 100% in stocks. Just pull back a little bit. Take some profits. We've come a long way.
So great insight there, Nigam, and thank you for a very wide talk we had across a lot of sectors there. We truly appreciate your time. That's Nigam Arora, the Arora Report.